So you want to build your first investment portfolio. Sounds great, right? But then, where do you even start? It can feel super overwhelming, and honestly, it trips up so many people. But guess what? It really doesn't have to be that complicated, and today, we're going to fix that. Okay, so you're ready to jump in. You've got some money saved up, but then the questions start flying, right? You're thinking, should I just buy one stock? Is that the move? Or maybe, wait, how many stocks am I supposed to own? Is there like a magic number? These are the exact questions that can stop you in your tracks before you even begin. And look, it's totally normal to feel a bit lost in all that noise. I mean, there's so much advice out there, and a lot of it contradicts the other stuff. Without a clear, simple plan, it's just so easy to get stuck, frozen by all the choices. But that is exactly what we're going to clear up right now. I'm going to give you a super straightforward, step-by-step blueprint. We're not using any confusing jargon. This is just a simple plan you can actually use to build your very first portfolio with total confidence. All right, let's get into it. Section 1, the building blocks of a portfolio. Before we can start building anything, right, we need to know what our materials are. So let's break down the absolute basics, the essential pieces you need for any solid portfolio. So first things first, what even is a portfolio? You know, it sounds like this big, scary word, but it's not. It's really just a collection of all your different investments. That's it. It's not about throwing all your money into one single thing. It's about spreading it out across a mix of things like stocks, ETFs, maybe some index funds. And that idea of spreading things out brings us to probably the single most important concept for any beginner, diversification. You've definitely heard the saying, don't put all your eggs in one basket. Well, in investing, that's not just some old cliche. It is the golden rule for keeping your money safe. And why is it so important? Well, the idea is actually super simple, but it's incredibly powerful. The whole point is that if one of your investments has a bad day, or heck, a bad year, the others can help pick up the slack and balance things out. Think of it like this. Diversification is your personal safety net. It's all about managing your risk. And this really highlights the two big traps that beginners fall into all the time. On one side, you've got the person who goes all in on a single stock that is just way too risky. But on the other side, you've got someone buying a whole bunch of random stocks with absolutely no plan, and that's just chaos. What we're aiming for is that smart, balanced path right down the middle. Which brings us perfectly to Section 2, your first portfolio blueprint. Okay, now we're getting to the good stuff. This is the simple, actionable plan you can follow step by step to build that portfolio we've been talking about. And we're going to break it down into just 3 easy-to-follow steps. It's not complicated, I promise. 1, we build a solid core. 2, we carefully add a few strong individual stocks on top of that. And 3, we decide how to split our money between them. That's it. See? Simple and structured. Okay, so step 1 is all about building that foundation, your core. And for a beginner, the absolute best, easiest way to do this is with index funds or ETFs. So why these? Well, because with just one single purchase, you're actually buying a tiny piece of hundreds or even thousands of different companies all at once. Bam! You get instant diversification. And you know what that means? Less risk and a whole lot less stress for you. So once that solid core is in place, then we can move on to step 2, selectively adding a handful of individual stocks. Now let's be clear, we're not gambling here. We're looking for big, stable companies that have been around a while and have a strong track record. The key here is to pick businesses you actually recognize and, understand. This just adds a little extra potential for growth without going crazy on the risk. And that brings us to the final step, number 3, allocation. This is just a fancy way of saying, how are you going to slice up your investment pie? A really solid, safe starting point for any beginner is what's called the 80-20 rule. So 80% of your money goes into that stable core of index funds we talked about, and the other 20% can go into those individual stocks you picked out. This keeps your whole portfolio nice and balanced, and most importantly, safe. Okay, so you've built the portfolio. Awesome. But here's the thing. Knowing how to build it is only half the battle. Now we need to talk about the most powerful tool you have as an investor, and that's your mindset. The right mindset really starts with this simple but powerful idea. Your portfolio is not something you build today and change tomorrow. You gotta get this. Investing isn't about frantically buying and selling every day. It's about building something that's going to grow over years, maybe even decades. Patience is literally everything. Think of your investing journey like this. When you first start, you're basically just planting a seed. Then, over the first few years, your job is just to keep watering it by investing regularly. And there are going to be storms, for sure. The market will go up, it'll go down, but your job is just to stay patient through all of it. If you do that, after a decade or more, that's when you'll really see the growth. It's a process, not a lottery ticket. So how do you actually play this long game? Well, it boils down to just a few simple rules. First, you got to be consistent. Add money regularly, maybe every month. Second, and this one is so important, don't panic when the market drops. And on the flip side, don't get all greedy and chase it when it soars. The real secret? Keep your strategy simple, because a simple plan is a plan you'll actually stick with when things get crazy. All right, let's bring this all home. We've covered the building blocks, we've gone through the blueprint, and we've talked about the right mindset. Now, here is your simple, final action plan that you can take with you and use today. Here it is, your 6-point checklist. Super simple. Number 1, start with that core of index funds. 2, add a few strong companies you actually understand. 3, stick to a balanced allocation, like that 80-20 we talked about. 4, invest consistently, make it a habit. 5, always manage your risk. Don't go all in on one thing. And finally, number 6, stay patient and think long-term. That's it. That is the entire strategy in place. Remember this, you don't need a ton of money to get started. You don't need to be some kind of financial genius. The single most important thing you can do, the one thing that separates people who succeed from those who just think about it, is simply to start. So I really want to leave you with this one final thought. Think of your portfolio like a tree. That first investment you make, that's you planting the seed. Investing consistently over time, that's the water. And having the patience to ride out the market seasons, that's the sunlight. You give it those 3 things, and with time, it will grow.